income tax and provisional tax. So let's assume a company has got a financial year that runs from the 1st of January, here we go, 1st of January to the 31st of December. Let's make this 2012. So it's going to earn taxable income during this period here, and in the middle of the year, right here, the company will have to make their first provisional tax payment to SARS. So this we're going to call provisional payment number 1. That is in June 2012. The second provisional payment will have to be made at the year end on 31 December 2012. So 6 months later, that will be provisional payment number 2. So up till this point, in June 2012, the company will not yet know what their income for the year is. They will simply have an estimate of the taxable income for the first 6 months. So provisional payment number 1 is going to be based on an estimate of taxable income for the first 6 months. Then our second provisional payment will be based on the estimate of taxable income for the whole year. So there we go, for the full year. It will only be after the year end, maybe around June 2013, that the company will know what its actual taxable income for 2012 was, actual taxable income. So only at this point here, June 2013, will the company know what the actual taxes are that they need to pay over to SARS. So let's assume that my first provisional payment was 50,000 Rand. So we're just going to make 50K, which means that's 50,000 Rand. Let's say my second provisional payment was 60,000 Rand, giving me a total provisional payments of 110,000 Rand. So those two added together is going to give me 110,000 Rand. Now, let's assume that my actual taxable income gave me an actual tax of 120,000 Rand, which is my actual tax. Now, based on my provisional payments, I expected my tax to be 110,000 Rand. My actual tax came to 120,000 Rand. So that means I still owe SARS 10,000 Rand. So the way this will look in my SARS T account is something like this. Now the SARS account could be either a debtor or a creditor, and you'll see why now. So my first two provisional payments, the 50 and the 60, will be recorded on the debit side of the SARS account, and then my actual income tax assessed, the 120,000, will be recorded on the credit side. And you can see my credits is slightly bigger than my debits. So the credit side, if we total this up, it comes to 120. If we total up this side, it comes to 110. So we can write the bigger one on both sides. And this means that I've got a balance that I need to carry down to the other side. And my final balance brought down is going to be 10,000 Rand on the credit side, which means that I actually owe money to SARS. Alright, so just quickly to recap, you can see that my two provisional payments, provisional 1 and provisional 2, are based on estimates of taxable income for the year, and my final income tax is going to be based on my actual taxable income, which will give me the actual tax that I need to pay during the year. Good. Just one more thing. If we look at the dates here on my T account, the 50,000 was paid on 30 June 2012. The 60,000 was paid on the 31st of December 2012. This 120,000 that we've determined only in the next year after 31 December will be backdated so that it forms part of my financial year 1 January to 31 December 2012. So we're going to include this on the 31st of December 2012, even though we only determined it after the year end. Good, so that's just an important thing to note. The reason for this is this amount of 120,000 Rand actually relates to this financial year. Even though we've only determined it after the financial year, it does relate to the financial year 1 Jan to 31 December 2012, and we call that the matching principle, to match the incomes and expenses to the period in which they were incurred.